This is the long-term chart of the euro against the US dollar going back to 2008. What you can see is that this is the period there in late February, beginning of March of 2009, when the euro finally found the bottom, and we started seeing the euro enjoying a nice rally for about 8 months. It has managed to move from lows that were around $100.23 to recent high in November of 2009, which was at $51.44. After that high was reached, and all of these debt crises began unveiling, we started seeing the euro coming under serious pressure against the US dollar. Obviously, this is an attempt from the market to reverse that positive trend that has been lasting for the last 8 months, and the euro until now has been pretty much declining against the US dollar for, let's see here, about 2-3 months, consecutive months. Now, what we've also witnessed is, okay, let's see here. What we've also seen is a very strong downward trend establishing for the euro against the US dollar on the midterm side of things. A lot of traders would agree that the weekly charts are usually the ones that we would consider as an indication of a midterm trend developments. Here is again that high at the $51.44 that we reached in late November of 2009, after which the euro began a very strong bearish trend sequence. What I call in my quarters theory these trend waves, of course, those of you who are familiar with the Elliott wave theory, classic Elliott wave theory, would probably recall that this is a sequence of several bearish waves. Instead of me going and actually I numbered the Elliott waves a little bit different in my quarters theory, and the reason for that is to simplify the count. Because that is the main problem that a lot of traders experience is the wave count. Proper wave count is very crucial for traders to be able to realize what stage of the trend development they actually want to get involved in. So what I do, instead of considering this wave number 1, 2, 3, 4, and then 5, these waves here that give you the price correction, I actually consider as an actual correction rather than being a trend wave. My reason for that is because they don't progress the trend, they actually regress it. Therefore, I don't consider them to be an actual trend wave, but rather a correction following a trend wave. So if we have to call this correction number 1 following bearish trend wave number 1, this is going to be bearish trend wave number 2. This would be correction after the bearish trend wave 2, correction number 2. And then we have bearish trend wave number 3 here in the last couple of weeks that has started once again for the euro against the US dollar. Having said that, there is obvious trend that is being established for the euro against the US dollar, which is still, in my opinion, a strong bearish midterm trend, which is happening within that longer term monthly developments of the euro being under pressure for the last few months. Now, obviously, in order for that trend to reverse, we're first going to have to see this trend line. If we were to connect these highs, obviously, we're going to have to see that trend line being broken. And especially previous highs, recent highs that were a little bit above $1.38. You might actually recall that the euro-dollar pair recently reached a couple of weeks ago a high at $1.38.17 or so. And that's going to be the first number that has to be broken above, in my opinion, in order for the euro-dollar pair to actually discontinue, or at least make an attempt to reverse that previously established bearish trend. That also is not only going to be an attempt to reverse that previously established strong midterm bearish trend for the euro against the US dollar, but also is going to give us perhaps an opportunity to see the euro retracing or correcting some of its significant losses that it has recently registered against the US dollar. After all, the euro has dropped since late November's high at $1.5144 to the recent low at $1.3267. And that's a very significant decline. How many pips is that? It's about 1,900 pips, isn't it? Give or take. So if that previous high is broken above, and that's approximately the $1.38 level, $1.3817, we also had another resistance on a short-term side of things at the $1.3839. If these resistances are broken, then we could see the euro actually being capable of producing a larger price correction.